a lot has been said. I mean, over the weekend, we did get, if you use any of the fintechs, you'd have gotten a message telling you that transactions that are related to cryptocurrency will not be accepted. And it's not the first time we've had this with the deposit banks. And then the week before, or days before that, there was the news that fintechs are not allowed to onboard new customers. So a whole lot seems to be happening around that space, the financial sector, looking at the fintechs at this time. To tell us really perhaps what's happening, help us understand, and some of the implications is the managing director of one of those fintechs. He's the managing director of Stellar's Digital Bank. Bukola Olutayo joins us virtually from London. Mr. Olutayo, good afternoon.
Good afternoon. Good afternoon.
So we see that, I'm good, thank you. So we see that the fintechs have the attention of the central bank now. Have you guys been called into a meeting? Could you give us some of the lowdown, what to expect, where all this coming from? We also hear that some of the fintechs are being used for, fraudulent transaction. I mean, that could happen to any of the fintech or any of the financial institutions. But give us a lowdown of what's really happening there, your conversations with the CBN, and all of that.
Good afternoon once again. Really, it's normal thing that that the regulators do often once in a while. I think basically what the CBN is looking into is how to ensure that KYC and process of onboarding customers are really done according to the way the regulators have stipulated it. And, recently the CBN actually gave a regulation of CDD regulation for 2023, also with anti-money laundering for 2022. And also there was also a memo that came out the other time as regard some account and wallet transactions. Basically, I think what the CBN is just trying to enforce here is to ensure that the fintechs are complying with the KYC regulation according to the CBN standard. And when we look at this KYC regulation, the KYC regulation has to be done on risk base, and oftentimes, when you want to open an account for a customer, you ensure that you do it on risk base, and that means that you want to ensure that the verification and identification of your customer is based on the risk that is attached to each of these customers. So if the risk is low, you do simple CDD or standard CDD. When the risk of the customer is high, like a politically exposed person or anyone that has been involved in fraud before, you do enhanced CDD. So basically, these are some of the things that the CBN is trying to ensure. And if a particular account has been flagged for any particular illicit transaction, what the regulators usually do is to investigate that account. And the only way you can investigate an account is to ensure that the account has an adequate KYC documentation that allows the regulators to be able to investigate and catch up with that person. And that's basically what the regulators are trying to do. And what the regulators have said is that, okay, they've sent a memo telling the fintech to ensure that we all stipulate with this KYC regulation. And once that is done, I think that we will all be fine. And also know that most of the accounts opened by fintech are done electronically. So it's more or less like also improving our technology to be able to perform these KYC processes electronically. So ensure that we are able to do all that and ensure that the risk of onboarding a customer that will use an account for illicit transaction is very, very low. So that's just basically what the CBN is trying to do.
So this instruction of no onboarding of new customers, do we know how long it's going to last for?
Once every fintech has been able to comply, the next thing is to communicate to the CBN that you've been able to comply with, or comply with it. And the truth is that complying with KYC processes are always ongoing. There are old accounts that some institution had that probably when they were onboarding, the KYC regulation there were different. Last year, December last year, CBN brought out a memo that all wallet transaction or virtual accounts that most fintech use must either have a BVN or an NIN. And there are old accounts. So these things are ongoing. They will keep on working on it. And you know that they also said that accounts that are open must be tiered. That is, they're going to be tier 1, tier 2, tier 3. And then the KYC that is required for each of these accounts are different. So most of the fintech are now trying to comply, in retrospect. So once you've been able to do that, the next thing is just to give evidence that you've been able to comply with all these things, and I'm sure that the regulators will release, or maybe should I use the word unban or unfreeze the institution that has been asked not to onboard new customers.
Okay, so in essence, you're saying that it's not all fintechs that are affected at this time. Some fintechs have been frozen because they have customers that have not met up with this KYC requirement.
It's not all fintech, definitely. The issue can affect all the players in the industry. So it's just basically some few set of people that they feel that, they've not been able to comply with this particular process. And as I said before, it's an ongoing process. I really don't see a major problem in the industry. There's no cause for alarm. Once they've been able to, comply with this process, it will, there won't be any issue. And as regards accounts that are used for illicit transactions, many times, even if you have the best KYC, it still can't stop. It still might not necessarily stop people from using their account for illicit transaction. But what is important is that the players in the industry, whether it's a bank or fintech, must have enough documentation or information about the person that will lead the regulators to where the person is. Part of the things you're going to collect is identification of the customer, their address, whether it's the home or address or anywhere the person can be found, So once you have all that, and when there is the account is used for illicit transaction, your responsibility as a player in the industry, whether you're a fintech or a bank, is to provide the information whenever the regulators come. It could be EFCC, it could be any other arm of the body that comes and say that, okay, we want to this account because it has been flagged to have been used for illicit transaction. So you're able to provide those details, and once you provide it, you are not supposed to be you're not supposed to have any problem, except if the account or if the institution does any transaction that the regulators has proscribed them from doing. For instance, maybe a cryptocurrency or whatever. That is where another problem could come from. But if the financial institution, the bank, or whatsoever had not done any transaction that the regulators had not prescribed them to do, then they are fine. Yours is to provide the details and allow the regulators to be able to catch up with whoever has used their account for illicit transaction.
And I guess at this time, cryptocurrency is defined as illicit transaction at this time.
Yes, at this time, it is not allowed in Nigeria. It's not allowed to, it's not allowed to pass through the banking system in Nigeria. That's because the CBN believes that it's going to create some instability to the financial sector or to the system in Nigeria. And I believe that when it even comes to cryptocurrency, all that is required is probably a more stringent and enhanced KYC or anti-money laundering or CFT regulation to actually control that area. But because the institution or the regulators are not ready yet to be able to bring out a proper policy to guide that area, I think that's the reason why the regulators are saying that, no, don't let us go into this yet. But when we are ready, we would allow you to be able to go into it. We have some countries that have allowed it. Countries like Singapore and the rest have allowed it because the regulators have already brought out policy that would guide and streamline the transactions that happens within the cryptocurrency and ensure that if by the time the cryptocurrency transactions happen, they will be able to identify the ones that are being used for illicit transaction or not. But the problem most time that regulators are having is that most time when the regulators want to regulate the cryptocurrency, the players within the cryptocurrency do not really want this. They are not really open to regulation because cryptocurrency is said to go through a blockchain, and most of the transactions in the blockchain are not easily traceable. If a transaction is not easily traceable, then regulators will not really be interested in allowing it to go through into the system because it could distort the financial system of the country.
Yeah, and I remember the CBN governor alluding that, some illegal funds were passed through the cryptocurrency block. But anyway, so let's head back to fintechs now. Since this news and the attention of the CBN on fintechs, I've learned of some customers that have, left because of the fear of, when you talk about fintechs, obviously everything is virtual. If anything happens, I don't know who I'm going to hold, and how am I sure that they will not just shut down? These are some of the fears that your customers, your fintech customers are having at this time. I wonder if, I know a couple of you are insured by NDIC, but people will wonder, if I don't have a physical address, how do I even get through to you to lay my claims?
Yeah, well, I think it's still part of the underdevelopment in Nigeria. We have a lot of digital banks in the US, in the UK, and everywhere. The most important thing is to ensure that you know the people that are behind this institution or the financial institution. Look, let's assume that Nigeria is not developed up to a point whereby we can have banks running online purely. Most of the digital banks we have today, they still have physical address because based on CBN regulation today, you can't run a bank, whether it's digital bank, new bank, or traditional bank. You have to get a license to be able to run a bank. And most of the license that most digital bank has is the microfinance bank license that allows you to at least have one office, you understand, at least an head office, where at least your customers can definitely walk in if there's any issue and all that. But basically what most digital banks are trying to do is to make life easy for their customers, such as bringing banking to their home doorstep, rather than they coming to the banking hall and standing for so many hours before they're able to get one transaction done. There are people that spend the whole day because they want to get just particular transaction done. So it's that particular problem that the digital bank are trying to solve by bringing banking to their doorstep. However, if the customer still wants to come to the bank, I believe that most digital banks still has at least one office, which is their head office. Because according to the CBN law today in Nigeria, you are required to have at least one office based on the license that you are actually using to run bank or to run the institution. So there is no digital bank in Nigeria as of today that doesn't have an office. You must at least have one office where you can easily be identified, because regulators, the CBN, also come in there occasionally to perform their own audit or checks. So there is actually no bank that doesn't have an office. At least you must have one office where the regulators or customer can at least walk into. It's just that the mode of operation or the operational strategy is to ensure that people don't come into the bank, but as much as possible, the bank is able to come to them and ensure that all the problems are solved online. So that's just it.
All right, and I know this is more recently. There have been reports of transaction failures, even though it's more with the deposit bank, but you are in the system. What's going on is that, when we had the mass jackpot, we knew that there was a brain drain that affected the ICT department of most banks. Is that what is causing this, or is there a new wave going on?
I'm not going to say 100% that I understand the reason for that, because in Nigeria today, the technology used for moving funds from one place to another is not resident with any bank and is not resident with any financial institution. That is 100%, handled by the Nigerian interbank settlement system. So really, I'm not sure if failure of a particular transaction is caused by a particular bank. However, there are some tech infrastructure that each of the financial institutions too will have in order to be able to run in order to be able to run their system. And there's a basic infrastructure that every financial institution is supposed to have. If you don't have that infrastructure, you can't actually run it as a fintech or a bank. So there are times that banks might have localized issues. They might have localized issues that can only be explained by each of the bank itself. And I can't really tell if it has to do with maybe the brain drain or whatever. But it could be any issue, and it could be due to technology. It could be any technological issue that could happen to any institution or any bank that allowed maybe the transaction to fail, from that particular bank. But if we have a situation whereby there is transaction failure generally within the system, that has to do with the shared infrastructure that we are all using. But if it's a particular bank that you notice that their transaction is failing, or if in a particular fintech that their transaction is failing, then that's a localized problem. That's a localized problem. But so I won't really say it's as a result of the brain drain that is happening in Nigeria. No.
All right, thank you so much, Mr. Bukola Olutayo, the Managing Director of Stellar's Digital Bank. Thank you for giving us some insight on what's happening at the back end of our monies.
Thank you very much for having me.
All right, let's take a break now.